Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about support and resistance level, which are fundamental concepts in technical analysis that can significantly impact your trading strategy. We will learn how to identify these key levels across the Forex, stock and crypto markets, and would know exactly how to use them effectively in our trading strategy, and would effectively know how to combine them in each of these markets. So stay tuned and as we master these essential skills. First of all, we start by understanding what support and resistance are, and they are critical concepts in technical analysis, helping you to understand where price movements may pause, reverse or consolidate. Support represents a price level where demand is strong enough to prevent further decline. It's basically an area where support, where price is going to have a stronger demand level, preventing price from going further. These are areas of support on the chart. These are areas of support that are being marked out on the chart. While resistance is typically, on the other hand, a level where selling pressure prevents the price from rising further. These are areas where selling pressure typically avoid price from going higher. Now I will draw an example of, I will indicate this as our resistance zone. I will change the color to blue to make it easier for us to spot and to make it easier for us not to mix them up. So these are our resistance levels on chart. These areas are our resistance level on chart. These are resistance levels on the chart being marked out. Areas where we expect price to sellers to prevent price from going higher. These levels are not fixed points, but are zones where price activity intensify, both buyers and sellers activity intensify. For example, when price approaches a support area, it prevents it prevents sellers from moving the market to the lower side, and it means that buyers are stepping into the market, creating upward pressure that often results in a bounce. Similarly, when price nears a resistance area, sellers dominate, causing price to retreat. I repeat, buyers when price gets to the support region, wherever the support region is, when price gets to the support area, it means that buyers are stepping in to create an upward pressure in the market. But when price approach a resistance area, sellers are dominant, causing price to retreat to the downside. Now you can identify these levels by analyzing historical data. These levels can be identified by analyzing historical data. Now they are not just areas of they are not just random areas where you can mark out price. We look for areas where markets have repeatedly reversed in a direction. We look for areas where market has repeatedly reversed in a particular direction. These points can be either swing high or swing low, as the case may be. It can be a swing high or a swing low. These are areas where we can draw our support and resistance line, either your swing high or your swing low. And these points are particularly useful. The points often indicate zones of strong supply and demand in the market. Support and resistance can also change roles If a support is broken, it can act as a resistance, and if a resistance is broken, it can act as a support. Now let's see a typical example of what we are talking about. As we can see, this area is a resistance area where price failed to break above this swing high, but eventually when price broke above, price had to come back to the previous resistance that now turns to a support and retest at that area before continuing to the upside. Likewise, that of a support, when price breaks above a support area, it can act as a resistance area in the market. Now major levels tends to hold more significant than minor levels. The major levels is reinforced by multiple touches of strong reversals, while minor levels may cause a temporary pause in price fluctuation. Understanding these dynamics allow you to anticipate market behavior and prepare for po ten tial reversal or consolidation. By focusing on these levels and their historical significance, you gain valuable insight into market psychology and supply and demand forces that drives price action. Now let's see a step by step guide on how to draw a support and resistance on your chart. We will look at a step by step guide on how to draw support and resistance on your chart. Remember, this support and resistance can be drawn on any time frame, either on any chart, either your forex chart, your crypto chart, or your stock chart. So for this, I will be making use of our crypto chart to show you a better way we can draw this on any time, on any chart. So by selecting the time frame that matches your trading style, higher time frames such as your daily or weekly time frame are best suited for long term traders, while lower time frames such as your 1 hour and 15 minutes are best suited for short term strategy. Once you have chosen a time frame, it's better you observe. When you have chosen a time frame, it's better for you to examine the price chart for swing highs and lows. So observing price chart for both swing highs and low on the Bitcoin chart on the 4 hour time frame. This we are observing swing highs and lows to mark out potential areas for support and resistance on the chart. These are both swing highs and swing lows that we are marking out on the chart. These areas where price have reversed direction multiple times. These are areas where price have reversed direction multiple times on the chart. This is a strong support area because it has been tested multiple times on the chart. This is also a strong resistance area. It has been retested so many times. So these are areas where we draw our support and resistance, both swing highs and lows. By focusing on identifying specific turning points like swing highs and lows, they are often marked as both resistance and support area. This is, the swing high are often marked as resistance area, while the swing lows are often marked as support areas. These points are crucial because they reflect areas where buyers and selling pressure have historically changed the market direction. We can use a horizontal line to connect these key levels. For instance, if you notice that price has been bouncing off a certain level multiple times without breaking through, you can draw a horizontal line to mark that area. Now let's use a horizontal line for our stock chart. In an area that we notice price has been bouncing off, at this area we can mark this area with a horizontal line. Can even further extend this with a horizontal line. These are ways to mark it. You can also mark this with a horizontal line. This side in the market, this is a horizontal line for the resistance area in this chart. This should also be a horizontal area. These are strong areas of swing highs and low in the market. The more touches on the level, the more valid they become. When there are more than one touches at a level, the more valued it may become. So these are areas where we can draw our support and resistance at. It is essential to adjust your lines for accuracy. If the level doesn't align perfectly with recent price action, refine it to account for most touches or reaction in the market. Because for more touches and more reaction in the market, the stronger that level. To ensure your support and resistance level are well defined, we need more touches. So the more the touches, the more stronger that level will become. This is typically what we are talking about. The more touches, the more significant that level become. We can also consider using zones rather than single lines when price does not always reflect or does not always react from that certain level. Like examples like this, when price does not always reach that level, when you use a line, you can equally use a zone to understand better that level. Using a zone would capture a, a good area or a good portion of that particular area to make you better understand what you are dealing with in the market. So this is basically how we can use our zones. By drawing rectangle, you can use rectangles instead of using a straight line. They help you visualize these zones more effectively. Finally, we have to validate our levels by observing how price interacts with them over a period of time. We can validate the level by observing how price interacted with them over a period of time. As we can see, in this area, price got to this area and reacted from it, came to the downside, reacted from the support area, showing that this area is a strong resistance and support area. When price got to the resistance area again, it reacted violently, pushing price to the downside. When price came to the support area, it reacted violently and pushed price back to the upside. And this is how we can validate our support and resistance area. Reliable support and resistance zone will constantly cause price to pause and reverse or consolidate. So these are areas of strong support and resistance on our chart. If a level is tested multiple times without being broken, it is likely more significant. Now let's look at this area in chart. On the Forex time frame, the Euro USD, we can see this area was tested multiple times. This shows that this area is a very strong area. It was tested multiple times before eventually it broke to the downside, breaking below the support area because there are stronger sellers in the market compared to the buyers in the market. So by following this step-by-step process, you will be able to draw a clean and accurate support and resistance level that highlights key areas of interest in the market. So we just need to draw areas where price finds it difficult to break, or areas of swing highs and swing lows in the market. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.